Welcome back to Don't Kill My Deal. Today's episode is a big one because we are talking about the number one thing that kills deals before the inspection even starts, financing. And I brought in the guy who sees it all from the inside, Ralph DeSciulio from Beacon Mortgage. If you're a real estate agent, listen up. Ralph is breaking down the loan mistakes that blow up contracts and how to spot bad pre-approval and what separates a deal that closes from a deal that crashes. So buckle up, because if you don't understand the lending side, you're killing your deals before I even show up. Let's get into it.
Don't kill my deal, not today, not tomorrow. I fought too long to face this sorrow. Patching holes, rebuilding the field. Hold on tight and don't kill my deal.
Hey everybody, I'm Fred with Don't Kill My Deal, your podcast that talks about real estate deals that I almost got killed because of, let's find out with our guest today, Ralph DeSciulio. Welcome to the program. Hi, Ralph. How are you?
Great, Fred. I appreciate you having me on your podcast.
Thank you. Ralph, why don't you tell us a little bit about yourself and how you got into mortgages, and tell us a little bit about Beacon.
Okay. My name is Ralph DeSciulio, Beacon Mortgage. We're a national, I've been in the industry for a little over 15 years now. And I've been with a couple other companies prior to getting into Beacon. And I realized some of the things that these other brokers or retailers were doing, whether it be on the greedy side, trying to make a lot of money in every loan, or trying to walk away from deals that really they shouldn't have to walk away from because there might be a little hiccup here or there. So that's why I started Beacon Mortgage 3 years ago, so I can help out the community, help out my clients, not trying to make a ton of money on every deal, but do more of a volume, and keep everybody happy and be able to do loans that, not anybody else really do. Somebody might have a bankruptcy or foreclosure, things like that we don't worry about. I've got 180 investors, so there's not really a loan out there I can do that is an option. So that's why I started Beacon Mortgage, because I knew the different programs out there that I could help out a lot more buyers than what the retail side was doing.
Well, 180 investors gives you a lot of leeway on for a lot of different people, right?
Oh yeah.
Oh.
5 to 7 years until the bankruptcy falls off. And I told him, I said, don't worry about it. We got you covered. We'll go to the bankruptcy court, talk to the judge. The judge said, yep, he can buy a home. It's good out everything else. And we're able to close the deal. So those are the types of deals that I like working on, where when the banks don't tell them no, and we can step in and make it happen for them.
Well, that's great to hear, man. So let's start with this one. What is the craziest deal you thought it was dead, but somehow you saved it? What comes to mind?
And that was a kind of a crazy one that there.
Well, bankruptcy is makes things harder, to say the least.
To actually close the loan. It was a primary residence, but they were going to be living like it was actually the gentleman who worked down in Miami at the airport, and they were buying a home farther north. It was over 100 miles away, and all the lenders were saying you can't make that a primary; it's got to be a secondary. But with the primary, you get a lot better rate and everything else. That's the only way we got to close the loan. So I had to go to bat for them and prove to them how they were going to be commuting and things like that. And this was their primary home. There's no nothing shady about it or anything. So they were happy they were able to get it to their house. Until then, the gentleman was able to get a new job after working where he was working at. So a lot of times we can get with the underwriters and give them what's called a letter of explanation, saying why do these people deserve this house. It's a lot of times we'll deal like reverse loans, also reverse mortgages. And I had an elderly person that, they were they still own the house,
Mm-hmm.
paid for their mortgage.
Gotcha. That brought me to questions. First, is that a mileage between your first house and the secondary house that banks want to see? I mean, if I decide to buy a house that's 50 miles away from where I live, would that be considered a second house, like a vacation house, or is that a
We consider
mileage?
no. Well, actually, what it is if it's not more than 70 miles away, it's then an investment property.
Oh, okay,
And then you have to put a little bit more money down, and the rates are usually a little bit higher. If it's more than 70 miles away, we can then say it's a second home.
gotcha.
So, and
It's
then
like your vacation home, or
what's that?
like a vacation home, like a beach house or something like that. You.
Yeah,
Okay, cool.
yeah, correct.
All right. And second question for a lot of people that don't know, not exactly aware of a reverse mortgage, can you just give a brief minute or two what it is, what
Yeah.
that product is?
So basically, a reverse mortgage is for somebody. It's based on their age. Um, so there's some significant amount of equity in there, but they can't get a cash out refi because they don't have income to be able to justify that. And they don't want to have to move because that's another cost and everything else. They want to, it's their forever home. They want to, that's where they want to, be when, the time comes. So what we do is we go in and look at what the balance is left. We pay that off for them. So they have no more mortgage payment. So somebody, well, then there's still $265,000 left over for either the kid's inheritance or for wherever mom or dad are going to live.
Mm-hmm.
So it is actually a really good product for people that are in that situation where they can stay in their home. We can actually do a program where we actually also pay their homeowners insurance and taxes.
Wow.
So they actually have zero payments. They don't have to worry about another payment whatsoever. Everything's paid for, and they live there and it doesn't matter if they live there for a year or 30 years. The underwriters do a calculation off the average age, for a male or female. That's what they use to figure out how much money they can give them and everything. But if they outlast that, that's just the bank's problem. They eat that cost.
Mm.
So it's not like, oh, if you turn 90, you have to leave. If you live to 105, good for you, and you're living there rent free and tax free and everything else.
Well, not too bad.
Yes, it's a great program.
You can outlive your bank or your bank expectations. All right. So let's see if I can get some stories out of this. So why do buyers sometimes get declined after a pre-approval? Can you give me an idea of why? I go there and talk to you, get the pre-approval, let's say for $500,000. And all of a sudden, after we do that, I got declined. Have you ever had a situation like this? And why would someone be in that predicament?
Usually two things, and we tell them up front: do not go make any major purchases. which they always do. They'll go buy a new car or
Furniture.
furniture store.
I almost did that.
Yep. Or I always love the one where, they go looking for furniture for the new house that they're about to move into. And the furniture sales rep goes, "Oh no, don't worry about it. You don't have payments for another year. You don't have to worry about it. It won't affect your mortgage."
Yep.
So you sign on the dotted line, they pull your credit, it goes against you.
I almost did that, Ralph.
Right, you just sound like my perfect customer. That
Crap.
we have a spreadsheet that we send them saying things to do and not do.
Okay,
It's
good.
funny because I had one lady that was such the other side of the spectrum. She's like, "We're running out of groceries. Can I go buy some groceries?" I'm like,
Oh, crap.
"No, that's fine. Don't worry about it. You can use your credit card, buy those things. Just don't make any things that are new on your credit report." And
I had a-
said, "Well,
I had clients paying us cash for the inspection because they didn't want to put anything on their credit cards.
yeah, I love those type of clients because they're so nervous about doing anything that they don't want to. So yeah, that's one of the reasons when I buy things like that. Uh, other times it's not so much the they get declined, but coming from an inspection standpoint, they'll buy a house and they'll sign a contract, and the seller didn't have a pre-inspection on there,
Mm.
so they don't know what's wrong with it. And then they go in and they pay for the inspection. They find out they got termites in the roof, or the roof is bad, or whatever. And then the seller's got to get that fixed. And then the seller's option is to, all right, do we fix that, or how do we want to handle that? So that's why it's always great if you're selling your house to have a pre-inspection, so you know what issues you have before you get to the contract stage.
I love you even more now. Thank you. So basically, if you're listening to this, if you're a real estate agent, tell your buyer, don't make any huge purchases. A lot of people are selling their houses and they have this extra cash in the bank and they think, yeah, I may give a down payment for a car while I'm getting approved for a house. Don't do that.
No, huge mistake.
All right.
Yeah.
So appraisals, I'm sure you've seen your fair share of appraisals nightmare. And what happens when the appraisal comes in low? What are the options?
Well, the one thing I hear about appraisals, and they're going now to more of what's called an AV.
Is that an AI already?
What's that?
Is that AI already doing appraisals?
No, it's not AI. No, we've been doing it for. Because unfortunately, appraisals are very opinionated, and I've argued with appraisers, and I had one gentleman up in North Carolina, and there was another piece of property that was connected to it. The laws change about five. You need to keep up with these laws and everything because these laws are constantly changing
Mm-hmm.
of what you can value at. And a lot of times, I've had appraisals come in. I pay for appraisers, so I can pay for a second appraisal,
Mm-hmm.
and they've come in $80 to $100,000 more than what the first appraisal
Oof.
because they use their opinion and saying, "Oh, you know what? I saw the cracks, and oh wait, these houses are all going to crash. That house is valued at that." Like, no, it's current value. What you use your comps in the area. And that's how you come up with the appraisal. No, I don't want to hear your opinion on what you think it's worth. It's fact. You have certain houses. What's the square footage? Those are the dollar amounts. And unfortunately, these people think that their their opinions matter more than what facts are, and then it causes people to lose houses because if they purchased it for 400,000, the appraisal comes in at 380. Well, now we got to bring another 20,000 to the table. If they're doing an FHA loan and they don't have a whole lot of cash or whatever, the deal's done, or the seller then's got a discount. And 9 times out of 10, the appraisers are going to stick to their gun saying, "Oh no, this is the right price."
Mm.
So then you have to go order a whole new appraisal, pay another $600, and get a whole new appraisal done, and hope that it comes in. And, and like I said, 9 times, or I should say, about 7 out of 10 times when I kind of do that, codes came in at a par value of what you needed to be at.
Yeah, well, let me tell you what I did here when I purchased this house that I'm in right now. We wanted to close 3 months later, so it was in 2021, and we made an offer in January, and we were supposed to close in May. No, I'm sorry, February, and we wanted to close back when in May for because of a different situation. And I paid for an appraisal myself. I just didn't want to, you know, to see, to get that surprise. And we end up doing 2 appraisals here. The first one that I paid for it just to make sure that my offer was in line with what we put on the contract. And the second one was the regular one that we did through the bank when we got approved to finance this. But yeah, I hear what he's saying. I don't know. Appraisals are always a touchy subject because there's so many variables there. We all heard about the stories of, even picture frames in the house make a difference on the appraisals.
Great job. They usually are on target and
Mhm.
what they're supposed to be. But every once in a while, or once in a blue moon, you get one that's just kind of a rogue, and they don't think personally that's the value of the house. And my argument is always it's not it's not what your personal opinion is. It's what the facts show.
Gotcha. And next here on my list is DTI, debt to income rate surprises. So buyers buying a new car or opening a new credit line mid deal. Touch base this a little bit. So can you explain how would that affect the debt to income if you're planning on buying a house?
Yeah. So your debt to income ratio is all your hard costs, and when we mean by hard costs is all of your credit card payments, the car payments, student loans, and then your mortgage payment. And we need to be below 50% on that. So when we say that is, let's say you make $5,000 a month. That means your mortgage payment, your credit cards, car payments, they can't be more than $2,500 a month for those payments. And so that's always one of the biggest things that we look at when we first get started. Where's your DTI? Because I have people come to me going, "Yeah, I want to buy this house. It's 500,000." Like, well, your DTI is at 60%. You can't afford that payment. But if you go find a house for 400,000, it'll lower the payment. It'll get below that 50%, and then you're good to go. So DTI is pretty. I don't say it's simple calculate, but you can kind of look at your expenses and kind of figure out, okay, how much is my mortgage payment going to be? You have to include in that also your tax and insurance, and that's what catches you sometimes also, and also your HOA. I'll have somebody come to me and we're going to find, let's say, a condo, and the DTI is at 48. They go look at a condo and the HOA payment's $600 a month, which isn't unheard of. And also that blows out their DTI, and they go, "Well, how come?" I'm like, "Well, you have to pay your HOA also."
Mm.
And they go, "Oh," I said, "Let's go find either a house that doesn't have that HOA, then you can get the same price, or find one with a lower HOA." So that's the DTI. That's always the trickiest part of the insurance and taxes, especially now taxes. People go online and look to see that taxes on a house are $2,800 a month, but that's a house that was sold 20 years ago. Now, when they recalculate the new taxes on the new value of the house, which is 500,000, the taxes might be $4,500 a month. So you're looking at another $200 a month basically in taxes, which sometimes we get down to I'm working with insurance to make see we try to shop the insurance to beat it by $20, like $10, $20 sometimes makes a difference on the DTI.
As a home inspector, we've seen our fair share of, pennies on the homeowner's insurance, making the difference between, qualifying and not qualifying for that loan. I always tell my agents, whether or not you think you're going to need a 4-point on the wind mitigation, just do it because it may help you, and you don't want that to come down the line. Put your best foot forward and pay for that 4-point on the wind mitigation together with your full inspection, just to make sure that you get, everything in line to improve that DTI.
But a lot of times you'll get better insurance rates if you have that 4-point, and that can be the difference in closing.
That's about right. Underwriter red flags, like large deposits in the bank statement. Have you seen those situations? All of a sudden, you see that big chunk of money in there. What the heck?
Well, it all goes back to the Patriot Act after 9/11 and all that. They put the laws in place, and it's a Patriot Act. They want to know where the cash is coming from. They want to know if they're coming, is it legal money? Is it coming from drug deals? Is it coming from overseas illegally or whatever? So if there's anything over $10,000, we've got to source it. Meaning we've got to go back to the bank account where it came from, and we've got to see a bank statement showing that A, the money was in that account, and B, the transfer up into the new account. So I always tell all my buyers, do not move any money until I tell you exactly how to move it and when to move it. Because you can't, there's certain things you can't do with money that, just it's, cash is, in my industry, cash is not good.
Mm.
And then we can go back in and then but then you have to wait for a house. I mean, you're trying to go under contract today. That ain't gonna happen because the sales might not gonna say, "Oh yeah, I'll wait 60 days."
Yeah, tell you that's the reason why we don't look under mattresses when we're doing an inspection.
You never know what you're gonna find.
No, we never know. All right, so let's talk a little bit about inspection. So when an inspection reveal a big issue like a roof or AC, how does that impact lending? Let me tell you one thing that I don't know, I just want to run by you. We had a client recently, it's a foreign national, and when he bought the house, the underwriter from the bank got the inspection report and he wanted everything fixed. I've never seen anything like that. The door between the garage and the main living space was not self-closing, and he took $15,000 from the buyer until that was fixed. I've never seen anything like that. Have you ever heard anything like this?
No, that's crazy.
Yeah.
Was the seller for a national? Or was the buyer?
The buyer was a foreign national, and for some, I don't know, maybe he thought that was the appraisers, not the inspection. Probably they mixed the documents, but he wanted everything that we pointed on the inspection fixed before they actually released the buyer's additional 15,000. So it was, I've never seen anything like that.
I've never heard anything like that.
Yeah. So yeah, let's talk about these issues. If you have a roof issue or an AC issue, does that impact the lending? Does the lender wants to know those issues?
The appraisal usually come out, after it's noted that for an underwriter to be up to approval.
Yeah.
The lemon laws with cars. If you buy a rotten lemon, a rotten car, you have some legal, ramifications. Buying a house, if you bought it as is, you're stuck with it as is, and that's all you're done. You're done. So that's why the inspections is such a huge part of the whole buying process. People don't give the inspection part enough credit because you're the one that's going to go find what the issues are with the house before they do anything else. So inspections are huge. I mean, especially down here with hurricanes here in Florida, they might have had some damage done or whatever, and they just kind of patched it up and put a band-aid over it. But there's a bigger underlying, whether it be mold, they had water, things like that. that you don't see with the human eye, and the appraiser might not catch it. And that's the inspectors, supposed to be able to catch those type of things. And that's what you do really well, and that's why inspections are so important.
Well, I'm a little biased in that in that subject. I still don't understand why people would do a Russian roulette with their money, their biggest investment, buying something that they don't know exactly the condition of what they're buying. So the inspection always say is a picture of the condition of the property at a time. So at least you will know what you're buying. And if you're comfortable, with the condition of the house, just move forward with that. If you're not comfortable, you can start asking either for a concession, or you can take. A lot of people love, a little bit of work. So I've had clients that, love to do a little bit of a project, and it's up to them. So Ralph, how can lenders and inspectors work together to keep deals alive? What would a lender expect from the inspector to not kill the deal?
Well, I mean, I would love for for every house, like before we go into I would love for every house to have a pre-inspection that the seller pays for before they put it on the market. But this way, when my buyer goes in, before we get into it and everything, and like we spend money getting it through underwriting and spending time and everything else, we know right up front what are the issues. So many times we spend a lot of time and effort. We're all commission based. We don't get paid on anything until you close. But you might spend a week or so on something, a deal, and you find out after the inspection that they've got issues, this and that, and the seller doesn't want to, give any credit, and the buyer doesn't want to pay for it, and 3 weeks down the road, it's okay. This is a dead deal because of it wasn't pre-inspected up front. I would love for that to become a more commonplace. That hey, if you're selling your house, okay, where's the pre-inspection to show what's wrong with the house, whatever else. So also then when negotiating price, seller credits and everything, they might say, oh, yeah, we'll give you seller credits because this is bad. But we might be using those seller credits for the closing and everything. Well, then the buyer doesn't have it, have to fix those problems when they move in. So a pre-inspection would be huge if that was. I'd love to make it a state. I mean, I know it'll never happen probably under federal law that hey, let's pre-inspect every house before it goes up for sale, so we know what we're getting into.
I think the smartest agents are doing that right now. I saw recently an article on Realtors Magazine online saying that pre-listing inspections are actually helping moving deals forward and not exactly delaying the deals. So yeah, again, I'm biased. I think just in a pre-listing inspection put both the seller's agent and the sellers in the driver's seat and being proactive and not reactive. You do all these curb appeal, do these, pictures, beautiful pictures. You do your open house and everything. You put, all the snacks and the soda and the water for the potential buyers to come in, only to roll the Russian roulette with the inspection. If you invest $500, $600, $700 on the inspection up front, you would be in the driver's seat saying, hey, we know the condition of this house, we fixed this, and this is considered on the price. And it really cuts to the chase of getting that deal closed as fast as possible, right?
Without a doubt.
All right. So what people think always kills a deal, but actually it doesn't. Is that anything that people think, hey, no, this is a deal killer, but actually it's not. So any of your thoughts on this subject?
Well, it's funny because a lot of times what kills the deal is sometimes I think a petty thing where it could be a small fix on a house,
Mm-hmm.
and the seller's stuck on their side and the buyer's stuck on their side, and I'm like, okay, between the two is the let's say it's a $400,000 house, and they're fighting over a $500 or $1,000 this or that. Okay, really, folks? Like, look how much money you're about to spend. If you really want to walk away from this deal, Mr. Seller, you're about to walk away with $300,000 or $200,000. I know, Mr. Buyer, you're about to spend $400,000, $500,000 on this house. How do you not come to an agreement? It's not like just stubbornness or ego, whatever. That no, I'm not paying that. I'm not paying that. And then especially for a seller, okay, great. Let's put it back on the market. Now you're gonna have to wait another 30 days. How much interest would you have made on the $300,000 in a savings account somewhere or an investment account? Probably a lot more than a $500 or $1,000. So it's comical sometimes. People don't use common sense to go do the right thing and say, all right, tell you what, let's meet in the middle, $250 or whatever it might be. show you've gone in and done inspections where everything looks great on a house, but there's a couple of little things that are minor, and a buyer wants to walk away or the seller don't want to fix it, it kills the deal.
Absolutely. You're going to fight for, $300, $500 just to spend $10,000 painting the house.
Yeah.
I don't know. Makes no sense to me.
Yeah.
So what's Ralph's top 3 deal saving tips when mortgage problems pop up? What's your 3 best deal saving tips?
Well, first one, like I just mentioned, it's when the seller doesn't want to give you a credit or whatever for a very minor detail. I'm like, okay, what are you pre-approved for? I don't know. I make a lot of money though. They think because they make a lot of money, and I see this with people that are making a couple $100,000 a year. They have so much debt, and their credit score is 540 or whatever, and the rate's going to be so high and everything. I tell everybody, and I tell parents to get their kids when your child graduates college or whatever, 22, 23. They don't have to buy that day, that week, that month, or that year, but they should go apply for a mortgage just to see where they're at. One, what's on their credit score. So maybe when they're 18 years old, one of their old roommates or somebody they know, whatever, stole their credit, has ran a credit card up, but they're making the payments on it, so they don't even know about it. There's things on your credit score. About 60% of people in the United States have things on their credit score they don't know about. So you should not take a look at it. But Credit Karma is good. The Credit Karma only is going to approve you for a $2,000 or $3,000 credit card. When you go apply for a mortgage, the most don't, when you're younger, go see what you need to get improved, and go find out. So many people tell me, "Oh, I can't afford to buy a house," and I always ask them, "Well, how much would it cost to buy a house?" They say, "Well, I don't know." I said, "Well, if you don't know, then how do you know it costs too much?" So figure that out so that you can then take goals of how much you want to save and how much you really need to buy that house. Right now we've got the Hometown Hero program. They're giving 5% of the cost of the house back to you to buy the house.
That's awesome.
So it's a great program. But the third thing is kind of tying with that is always know what your credit score is. So many people in this country don't know. They don't know what their credit score is. They don't know where they're at. And so when they go apply for a credit card or they go buy a car, and I'm not talking about buying a house, just life in general, they don't realize how much more they're paying because of their bad credit. And it's just because it might be little things on there that shouldn't even be on there. And it's a big difference between a 640 and a 740 credit score in terms of what you get to pay for things.
Is that a way for people to go and check their own credit scores? Is that a website or something?
You can go to Credit Karma. Credit Karma is a good tool to look at. Every year, though, a lot of people don't realize if you go to Equifax, TransUnion, and Experian, they all have every year. The federal government mandates that they give you one free credit report every year. So you can go to any one of those and say, "I want a free credit report." You put in, and you log into their site, it's all secured. Put in your name, address, date of birth, social security number. You hit a button, and they'll give you a full credit report. They'll see if your parents ever opened a credit card in your name, your friends, your relatives, ex-boyfriends, ex-girlfriends, ex-wives, ex-husbands. You'll find everything that's on there, and you'll see what's on there, and then they'll tell you what you need to do to fix your credit score.
Oh, that's nice.
You want to have your credit score up around 700, 720 to be able to get the best rates.
So best rates are which credit scores?
Anything over 700 is good.
Over 700.
Yeah. 740, 750 is like people, I have people that have perfect credit score, they'll be in like 780, 800 or whatever, and they'll freak out because when we go credit pull, because of the way our credit system in the United States is set up, which is the goofiest thing I've ever seen, you get a charge to your score, and your score might drop 5 or 10 points. And I have people freaking out. I go, listen, if you have an 800 and you go down to a 70, 90, it doesn't matter. See, there's nothing higher. It's, it's like getting an A or an A plus or an A plus plus. It's either over 750, and if you are, great, don't worry about it. But when I tell people, hey, yeah, I want to do a credit pull, your score's going to drop from a 770 to a 760. It's not going to affect your rate or anything because 750 is the highest score that you can really get.
Gotcha. Yeah, a lot of people that I'm aware of that's really psycho about checking their credit scores. And a point drop makes them,
They'll let you know. And in fact, also with credit card companies now, Capital One,
Mhm.
Discover, and all them, it's a free service that if you have their card, every time your score changes by more than like 5 points, they send you a notification. And any given time you log with your credit card, you can actually go there, pull up a credit report, and pray and see where you're at.
Yeah, and check that credit report, to see, which accounts are open, which are not. And if you have as Ralph said, if you have a problem, reach out to the credit bureau themselves, let them know if there's any discrepancy, if there's anything that's not correct.
Yeah.
They're most likely willing to work with you. All right, Ralph, as we head towards the end, what is a resurrection story? Do you have any deal that was dead and came back from the dead to alive?
We did. We had a buyer that went ahead, unfortunately, and did the ultimate thing, and they bought a car.
Oh my gosh!
And like a week before we were going to close,
A week before.
and I was like, "Why did you do that?" Oh, well, we needed a car, and I saw it. That they didn't report that they didn't know about, because we didn't really need it. We already had them pre-approved and everything else, and we had conditional approval and everything. So luckily, we had to get it. It took a day or two later to close it, but we were able to get the thing closed, even though they bought that car. They added a $650, car payment, 2 weeks before closing. You know, those are always the interesting ones. When all of a sudden at the last second, I get a phone call because as soon as they buy something, my underwriters get a notification.
Oh, really?
One of the other Yeah, well, the other thing is we pull credit 2 days before closing
Oh,
to
okay.
see if there's anything new on that credit report. And, sure enough, sometimes it's not right.
Boy, hey, that's an emotional ride right there.
Yeah, big time, big time.
Ralph, let's give some tips. So let's say there's an agent out there, and the agent wants to trust someone like you with their client. What questions should they be asking their clients before trusting them to, a mortgage broker or a mortgage lender?
They can qualify for a $300,000 house, and they've been looking at $600,000 houses. And
That's
then
a
they get
problem.
upset. They're like, "Well, why can't we buy that house? You don't make enough money to qualify for that house." And there's a lot of great lenders out there, a lot of great mortgage brokers out there. I'm friends with a lot of them. I try to tell everybody, you guys aren't my competition. We're all, there's so much business out there. I don't get upset if somebody says, "Hey, I'm going to go with this lender." Okay, great. As long as they take care of the buyer and they get them a good deal and everything. I get upset when I'll ask them after they close, "Oh, what was the rate you got?" And I'll find out they charged them, a point higher or half a point higher because they were greedy. And I'll let them know. I'll say, "Oh, by the way, here's what our rate would have been." And they go, "Well, what's the difference?" I'm like, "Well, I'm not retail. I own a company, so I can make margins that I want to make. So if I need to get skinnier and make less money on a deal because I got to get your DTI lower, I can do that. I don't have anybody over me that's what I have to make because I don't have to pay for a marketing department and all that. So when I tell the realtors thing, what lenders are you using, make sure they're giving you buyers a good deal. It's kind of like anything when you're going to buy something. Don't be afraid to shop it around. When you go to buy a car, you always look around saying, who's going to give me the best deal on this car? When you go to buy, certain things, this is going to be the largest investment you make in your lifetime. So why wouldn't you want to shop it around and saying, hey, who's going to give me the best deal here? How can I make this thing work? But then also you got to make sure you're going to get somebody that knows what they're doing, that can resurrect a deal if something goes south on you, or has investors that can make things happen. Like I said, I've got to do it where they come in, they do buy something like that, and the investor will only go up to a certain DTI. Well, I've got 180 different investors. I can flip it over to another investor to save the deal, which I've done many times. We already had the package. I had one that we had a week to close because the appraisal came in low, and the other investor wouldn't take the appraisal. So I got a new appraisal. We closed in a week, and the buyer was happy.
And these people will be fighting for a deal, right? They'll be fighting for a client, and
Yep.
that's great. What is the biggest red flags agents and inspectors should warn buyers about early? So, what is something that the agent can tell their clients? We talked about the car buying and furniture purchase, but anything else on the red flags, like changing of jobs or anything like that?
Well, so what are you talking about from the agent talking to the buyer about
Yeah,
the
the
house,
agent
or
the agent instructing the buyer, what would be red flags for the buyers to be educated, even by agents, what they should be aware of.
well, couple we going in there, they're like, nope. And the person that's selling the house is using the same agent as you are buying the house. And it happens quite often, or not quite often, it doesn't happen. And I say to my buyer, if you're going to go to court and you're being sued, are you going to use their attorney? They're like, well, no, why? I'm like, well, right now they're negotiating. They got hired before you got them because they're already listing the house. Who are they going to negotiate for? Are they going to negotiate for them, or are they going to negotiate for you, or are they going to try to tell you, oh, we're in the middle? Well, if they're in the
Yeah.
And a realtor, you should always have a professional realtor on your side. I always use the court thing. It's like kind of going to, you're being sued, you go to court, you're going to be your own, defense attorney.
And people buying new construction house without a realtor, I think is honestly, I think is crazy.
Well, the home builder that I was talking about earlier, they told me, I said, well, we don't have a realtor there. So you're saving money. So, it's a stupid thing. You should never tell your buyers, never come in here with a realtor because then we can't give them as good of a deal. I said, you're telling me flat out they should not use a realtor. They said yes, which I think is not hip, I'm sorry, or like a realtor, like there's some legal things that I think that's illegal. But I said to him, I said, all right, well then we want all the discounts. He goes, no, you're not using our funding. I'm like, yeah, but you're not paying a realtor. He goes, well, then you come in with a realtor. So I always tell people, yeah, when you're going to a home builder or whatever, make sure you take a realtor in there with you. But before you walk in the front door, because if you walk in the front door and you just put your name down, like saying, hey, I'm walking in, right there, that keeps your realtor out. They say, no, you walked in here without a realtor, you can't have a realtor here.
Oh, I didn't know that.
That's how builders play the game. So yeah, you don't want to be walking in there with anybody, without somebody, or just put your name on anything. You walk in, like, we're just looking. They'll push you as hard as they can to put your name down on a piece of paper. They want to be on the get you without the realtor. So I
Yeah.
always just say, no, so those are my tips for how, when you should use a realtor and when you not use a realtor. And there's really never a time when you should not be using a realtor.
Absolutely. I agree 100%. And I've seen situations where the realtors fought for clients with these are not sometimes very easy conversations. And if you don't know what you're doing, as a buyer, you probably don't know what you're doing. And you have someone that hopefully are experienced enough to fight for you with the builder. And the builder, would sometimes give in. Especially nowadays, with a little bit of excess of inventory, they might be. I saw today, or I saw that last week, I'm sorry, that the builder's budget for what's called the builder's budget for home warranty for the 1 year warranty is $45 per house. So they budget for each house that they sell $45 for their 1 year warranty. They might be using great contractors. I don't know. We are not seeing that. Yeah, that's how much they accrue in order to save you. So a lot of people don't do, their 1 year builder's warranty inspection, and they just first they don't do inspections when they buy a new construction. The other day we had these sellers that blacklist us to do inspections. So the buyer came and said, "Hey, we want to use a damn good inspection." They said, "No, damn good inspection is not allowed in my houses." They can't. By the way, they cannot do that.
Because you do too good of a job and you find all the things that are wrong with the house. And that's the issue.
You did a damn good job. So let's wrap it up. There's one piece of advice Ralph gives first-time home buyers and new agents pursuing their houses.
First of all, always use a realtor, a professional realtor. And also ask them, so do you do this full-time or do you do this part-time?
That's a great question.
Like how many sales did you have last year? Oh, well, I sold my uncle's house and my aunt's house. Okay, those are part-timers that really don't know all the rules. No, they don't know how to negotiate. You want somebody that sold at least 15, 20 houses last year, 30 houses, because that means they know exactly what the market really out there it's got what they can negotiate for and everything else. You're going to leave tens of thousands of dollars on the table because they don't know any better. And like these home builders now, it's such a desperate market for them. They're offering these realtors 4 or 5%, which the buyers don't realize that. So they're making a ton of money, but all they're doing is taking money out of your pocket because that's money that you should be able to negotiate with to get off your house, upgrades and everything else. But if you don't have a good realtor, the realtor's going to take us 4 or 5%, and they give us a great deal. And then you move in, you pay $500,000, and your neighbor next door bought the exact same house for $475,000. Like, well, where's the $25,000 difference? Oh, went into your realtor's pocket.
Exactly. Yeah, folks, use a realtor. It's always good for you. And if you're a buyer, the seller will actually, at the end of the day, regardless of what people say, the sellers will be paying for your realtor's advice. For all the realtor's advice that you'll be getting, they will be compensated by the sale of the property, which the money comes from the seller's side, usually. Rarely you see the other way around.
And of course, always, always, always make sure you have an inspection. Don't ever buy a house without an inspection.
Whatever he said. All right, Ralph, thank you very much, man, for doing this. I appreciate your time. And how do people contact you, Ralph? How the people listening to this will be able to get hold of Ralph DeSciulio?
You can go to my website is mybeaconmortgage.com, or my email address is ralph@mybeaconmortgage.com. And it's, that's the quickest way to get me on my phone. My phone, give me a call, 407-718-2223. And I'm not, like I said, retail. My phone's on nights and weekends. So if you need a pre-approval on a Saturday or Sunday and we've been working together, I can get you something so you can get that bid in to win that house.
And I will include Ralph's contact on the description of this episode. Thank you very much, Ralph.
Fred, I appreciate the invite. It's great talking with you.
My pleasure, man. Thank you.
Have a great day.
You as well.
Don't